What's up, guys? Welcome back to another market analysis. For this week, we're going to be covering from the 26th, which is January 26th, to Friday, January 31st. Okay, guys, so this is a big week. This is the last week of January, but this is also a big week in the markets. As you guys can see, I have the news pulled up right here, and we have a lot of interesting things, right? We have a lot of interesting things this week. Starting off Monday, we have some news for the chef pairs. I don't usually trade any Swiss franc pairs, so that's not going to bother me too much. But for those of you that might trade like USD chef or anything like that, keep a lookout. Tuesday, consumer confidence. That's going to be something that's going to affect me trading any USD pairs. We have CPI for the Aussie, the Australian. Wednesday, that's the biggest day of this week. FOMC, we know what to do. Right. One little thing I want to tell you guys, this is FOMC of the first, this is the first FOMC of 2025. So be careful. All right. Do not blow your accounts. Do not throw away all your hard work that you've been doing just for it all to be taken away by FOMC. Right. I usually don't trade FOMC. I'm usually out of the markets by that time. So trust me, Wednesday, I will not have any positions opened for that. I'm just gonna watch it and spectate it. I don't trade news directly. We trade after news. We trade to see what news mitigates, and then we go after that. We trade the reaction to see what news does, what direction does it give us, does it change the sentiment of the market or does it not. That's what we do. We don't trade news. We react to the news and we wait till the news come out, and we use the information that the news gives us to make our next potential play. Okay, so just be careful, guys. FOMC, just be careful. Thursday, we also have unemployment claims. We have financing rate. We have a lot of news that's pretty much going to touch every pair this week. We have core PCE, which is something else that is major on Friday. So that means every day of this week, we have some type of news that's going to affect most or majority of the pairs. Okay, so just make sure you're careful this week. Just make sure you are watching these news times. Okay, that is the main thing I want to say here, guys. Just make sure you're being careful. We also have ECB as well that I'm seeing here on Thursday. So there's a lot of things that we have this week. This is gonna be a little fun week. All right, guys, it's gonna be a fun week. Make sure you're watching the markets, and let's talk about what we're expecting as far as like a technical analysis side. We're gonna wait to see what comes out on the fundamental side. This is, like I said, this is the first major like news wave of 2025 that we've been seeing. So I want to see how these rates and everything come out, and we are going to, depending on how that comes out, that's going to take us for the first quarter, right? That's going to tell us what we should be doing for the remainder of the quarter as far as the first quarter and how we should trade these markets and the strength of the dollar and everything like that. So I'm going to wait. I'm not going to try to make any predictions. I'm not going to tell you guys any predictions at the moment as far as on the fundamental side. I'm going to wait to see what actually comes out. We have a new president as well. There's a lot going into this like news and everything. We have a new president. We have just a new environment right now with new policies and everything like that. So a lot of things could change. So I'm not going to try to make any predictions. I'm going to wait till the news come out and see what the official numbers are, and then we'll talk about it as that goes on. Now we're going to go to the technical side, and we're going to talk about the technical side and technical analysis and what potential areas we're looking for. Understand, all this is probabilities. All right, the markets are probabilities. Nothing is for sure. Okay, always do your own analysis. Always do your own research. Do not blind trade me, guys, please. Okay, but you can use my market analysis as reference because I do trust my market analysis, and I trust in myself and my skills. So but I don't want you just blindly just taking anything that I say. Okay, make sure you're always doing your own research and you understand the risk of trading. That's pretty much all I have to say. Okay, so let's go into DXY and look what we see here, guys. You guys remember I was telling you guys about this area here that I've been waiting for us to come down to on DXY. If you've been following the market analysis for the past 2 weeks, you can kind of see how the analysis is kind of just playing itself out over time, right? If you've been paying attention, you've been seeing how these markets been moving. We've been calling great directional bias on these pairs, so make sure you're paying attention. And I know a lot of people have already profited from the directional bias. All you need is directional bias. After that, choosing the demand zones and the supply zones and everything like that I teach you, it makes it much more easier when you understand the directional bias and the cycles of the market, right? It makes it so much easier to choose your next demand zone, your next supply zone, everything like that. And you're going to see that as these analysis goes on. I want you guys to go back to like the old analysis and just check it up, right? I don't want you guys just following me and listening to me if you haven't actually looked to see if what I'm saying is actually working or not, okay? Prove it to yourself first. So go back, check the analysis, see how the plays turned out and everything turned out. Just make sure you're continually just proving to yourself what you're seeing, and that's where the back testing comes in as well. But we'll talk about that as time goes on. I have videos coming out on that. I have more, as far as back testing, I have more, I would say, educational videos coming out aside from the analysis to you guys as well to help you guys with that. Now, DXY. What do we see? So DXY we have here, which is our reaccumulation. This was the area that I was waiting for the market to get into. Now, I'm gonna mark out this demand zone as just a huge area, right? For now, this is where I expect the market to halt. I don't think we will. I'm not saying we're gonna explode from here, but I expect at least a reaction, right? At least a reaction or some type of pullback from this area, and then we may potentially still continue down. That's still a potential option here, depending on how this news comes out. Remember, we have news this week, so we want to accept the possibilities of multiple scenarios, right? Understand where we're at. We've just made a huge push to the upside, right? Anytime you're looking at these markets, guys, I want you guys to actually just zoom out, okay? Make sure you're zooming out and you're looking at where we are on a general basis, all right? I know a lot of us get stuck on like 15-minute, 5-minute time frame, and we're looking at this structure right here. Let me zoom in. So I'm on the 1 hour time frame, even the 1 hour time frame. I'm looking at this structure right here, and I'm like, okay, we got this low to this high. The market should react from here. We should go higher. But then when this happens, it's like, oh, what happened? But when we zoom out, we're still bullish, right? We still have all of this area here that the market could come into and can come fill. Okay, so it doesn't mean we have to react here. Why should the market react here? This is just a reaccumulation. This is not where the major orders came in. You want to know where the major orders came in? The major orders came in down here. This is your origin right here. This is where you would bet your money at. Okay, if I was gonna bet my money, this is where I would bet my money at. All right, here you need more confirmation. So I would wait until the market gets down here. We did take out liquidity, which is good. So now I would wait till the market gets down here, wait for some type of accumulation, wait till you see some actual buyers come in, and then we can take this market higher. But generally on DXY, we're still bullish, right? We're seeing a pullback after we fill this imbalance, which is good. We have this huge accumulation of orders here. So most definitely I can see the market pulling back into at least the 50%. So if we don't react from here, right? If this is not that strong and we start, let's say we don't get this reaction, which is going to be my first option. This is going to be the first thing we're looking for, is a reaction from this area to take DXY higher to continue to strengthen the dollar, right? If not, then if we don't see that reaction, we're probably going to see underneath 50%. So this right here is going to be no man's land, okay, except for this area right here. Let me the only other area you should be looking for buys, and it's going to be minor buys too, only because that we're at the 50%, so the market could most definitely react, and we have imbalance right here as well. So the only other place that you're going to be looking for buys here on this market is going to be over here. Okay, this is the next area you're going to be looking for buys. Like I said, these both areas, and I'm going to put them different. I'm going to put them as POY2 because these are decisional points of interest. These are not extremes. This is the extreme, right? If I was going to tell you to set a limit order or to bet your money, this is where I would tell you to do that. Both of these areas right here, we need to see actual buyers come in here. This is more optimal. It's higher probability. This right here is the most riskiest area. This is less risky, and this is the least risk. Okay, this right here is less risky because we are at 50%. So we are at 50% of this push. So we've gotten a structure, and we could see that market potentially start to reverse in the middle, right? We don't always have to come into the origin. Understand that the market doesn't always come into the origin. So we could also see, if we do pass this area, we could also see a reaction here and the market start accumulating right here before we go higher. We could see that happen. Okay, why? Because we've made it back to the 50% retracement. All right, we've came back into discounted pricing. So buyers are interested in buying the market at this discount, especially since we're right back into the range. Okay, if the market comes down here and we're right back into this range where buyers was accumulating in the first place, why wouldn't we want to see buyers here again? Okay, just letting you guys know. So just be careful on DXY. We may see some pullbacks. All right, now with that being said, let's go to EU, and we're already seeing the effects here on EU. We're seeing our pullback. We're coming into our first supply zone, which is going to be this area right here. We're going to wait for the market to come into that area. We'll be here probably by Wednesday. And depending on how we get here. So because of the amount of news, guys, that we have this week, I'm going to tell you guys not to set limit orders directly on these areas, not for this week. All right. The thing about news and limit orders, and why I'm giving this, like, you know, kind of warning and extra precaution, is because of spread. Okay, that's the thing with forex and trading pairs. We do have to deal with spread, and we can get stopped out just by spread alone. Which means, you know, we could have the market come in here and react, but news comes out and we get a wick past this area, and the market immediately starts reversing. You got taken out by spread. All right, and you're gonna lose more than what you risk in the first place. So that's another thing as well. It's not the fact that you're also getting taken out, but you're also losing more. All right, so for this week, I would not advocate for limit orders, but this is the origin, so I would definitely have a, I'm gonna set it right now so you guys can see, have an alert set here. You're definitely gonna be looking for selling opportunities within this area. This is that manipulation of these highs that took us lower, right? If the market's going to react, it's going to react from here. In the meantime, you don't have to wait for that. Okay, in the meantime, you can counter trend that. Why can we counter trend? I was talking to my Discord group this week, and we were analyzing this. As you can see, we gave a change of character. All right, market gave a change of character. We can see the market's pushing to the upside. We have a manipulation of the lows. Look at that. Boom, manipulation of Asian lows. As we're seeing this market push higher, we give ourselves a change of character. The change of character gives us opportunity to look for reversals in the market. Now, we did not make it. We missed it by like a pip or two, I think. Yeah, but like 4 pips. Here was the mitigation. This was the area we're looking for entries to take this market higher. You can see it missed it by like a pip or two, but like 4 pips, I mean. And then we also have a nice accumulation here. So here's our, all of this liquidity. Let's do that. Boom. Here's our liquidity raid. Here's our manipulation. We're gonna go ahead and delete this since the market didn't get into that. Manipulation. Here is our next demand zone. So break of market structure. So we have a bullish market structure, not market cycle right now. Let's go BMS top. That's the manipulation. Sun alert there. Let's delete this one. Okay, so 1 or 2 things I'm looking for, guys. Either we're gonna come down here, we take buys from this area, great, most optimal area to take buys from, or we look for a reaccumulation. So we want to look for a manipulation of the lows, a push higher, closing above the high, and whatever that manipulation was. We take that to the upside, and now you can target here. Now, if you get this buy, and if you can position yourself in a buying opportunity here, now you can potentially hedge, because now you're in a buying opportunity. So now you can risk more money. You have leverage for risk, because now you can risk into sales. So let's say you take a sell here. You take a sell limit or whatever you want to do. You want to wait for opportunities in the lower time frame, whatever you want to do here, right? And let's say you take a loss, your potential buy that you caught here is going to make you more money, and it's going to cover for this loss. Okay, so try to set yourself up in hedging positions as much as possible. Don't force it, of course, but if the opportunity presents itself, always take that hedging opportunity so you can cover yourself on both sides of the market. All right. So yeah, that's pretty much what I'm looking for here on EU for this week. Either we come back into this zone right here, or we get that reaccumulation that takes us higher into our supply zone, which will we be looking for sales. All right. Higher time frame, we can see this could be the start of a potential huge retracement, right? Make sure, and one thing I want you guys to notice as well as I'm analyzing, how when I zoom out, I'm also looking at the bigger picture. Okay, yes, I understand we can react from here, but the market also could want to come and retrace back all the way to the 50%. Where does that line up with our next supply zone? So even if we go past this area, and this is why I'm also saying look for buy opportunities as well. Once we get this change of character that I showed you guys here on the order flow on the lower time frame, you can hedge. Okay, once you get that change of character, only after you get that change of character though. Once you see that BMS and we start breaking order flow and you see that change of character and the market starts reversing, you can take hedging opportunities into your supply zone as long as they are confirmed reaccumulations, right? It has to be valid reaccumulations where we actually see buyers. This is why I look for that specific drive, specific 1, 2, 3 drive, which is showing a distribution. And then we look for a manipulation underneath any lows, whether it's Asian lows, whether it's, you know, London lows, whatever lows, we just need a manipulation. And then we need to invalidate that high, which created that distro. Once we do that, we look for that mitigation, take a buy right here, take the market higher. Right? That is a confirmed reaccumulation. Okay. The reason why we're doing that is because when we are taking these reversal opportunities to the upside, we're not on the main side of the trend, right? We're trying to buy into our supply zones to sell because, I mean, the main trend has been bearish. This is just a reversal. We're counter trending. If you're going to counter trend, you need to make sure that you're taking great and high probability setups, okay? All right. Now let's go ahead and go to GU. GU is actually in a very interesting spot right now. We're inside of our supply zone, where we're getting inside of our supply zone. Same thing here, guys. When we're looking at this area, you guys can see, boom, I talked about this area, guys. I told you guys that I am not looking to sell GU anywhere here because of this imbalance here, and I also told you guys that I was looking for us to come above this high. Check the last market analysis. We've been predicting this since then. Okay, so I mean, this right here is your most optimal area to look for sales. So if GU is gonna sell, it's gonna sell from here. And trust me, guys, this is where we would want to look for sales, because honestly, if we go past this high here, I'm going to be looking to take GU higher, which is actually what I'm thinking about, and which is why I'm not. First of all, I wasn't going to take a limit order here just because of how this week is looking with all the news. So no limit orders this week, right? We're only going to take confirmation entries. We're going to wait for the market to actually get inside the area first, see some reactions. Then we'll take a market execution with our stop loss covering the entire area. Okay. But just like no blind limit orders just for this week, just because of all the news. We don't want to set a limit order and forget about it, right? Or anything like that. So let's just be extra careful and not waste any money. I've lost money doing this. I've lost, like, let's say one time I've set a blind limit order one time on one of my accounts, and some news event came out. I think it was CPI or FOMC. I forgot which one it was, but it was some type of news event. And my stop loss was only to lose 1%. I ended up losing 3%. 3%. So I was like, okay, yeah, no more blind orders on like news weeks, okay? or news days. So just make sure you're paying attention, because I don't want you guys losing more than what you risked. All right. So now GU, we're gonna follow the bullish market cycle for now. But like I said, I am looking for sales in here. I'm gonna wait to see how the market reacts. Like I said, this was a mitigation right here. So we have our mitigations going to the downside. This is our last mitigation. If the market's gonna sell, it's gonna be from here. We're gonna see how the market reacts, and we're gonna see if we see a distro. So we see potential distribution, redistribution going lower. We could take these sales to the downside and try to take the market lower, right? Cool. If not, you guys know what we're going to look for. We're going to look for that reaccumulation. So we fill the imbalance. We can delete this now. Boom. If we're going to take hedging opportunities and we're going to take buys to the upside, this was an area we were looking for. You can see the market did not make it down here. Now, for those of you that was in the live call, we had a live call on Thursday. We actually talked about this potential setup right here. I actually didn't take this, but we actually talked about this potential area here. I called this out as a scalping play here. So one thing we're seeing this accumulation underneath Asian lows. Seeing the accumulation underneath Asian lows, we broke, gave a change of character. Now, the main thing here about this trade is now this is building potential market cycles. So we have an accumulation, and then we have the reaccumulation, which is what I told everyone to look for during the live call. Here's your distribution. This is the perfect example, guys. This is exactly what I mean when I say look for confirmed reaccumulation. This is it right here. Here's your distribution. So one thing I want you to pay attention to is the fact that we have this accumulation. Why is this important? This first accumulation is very, very important. All right. Why? This shows the first instance of buyers, potential buyers. That's all we need to know. Potential buyers. Okay. The accumulation tells us that, hey, there was potentially buyers here. Were the buyers strong enough to take us above the highs? Yes, they were. That's when we got the change of character. That's all we need to know. All right. Now we see this push to the upside, and we see the market come down and do what? Mitigate the accumulation, and we're still reacting. Okay, cool. I mean, if you were trading London session or whatever, if you're scalping, you could have probably taken entry just off of the accumulation. That's fine. If you want to be safer, and this is what I said to my group, the reason why, or to the live call, the reason why we want to be safe and why we look for the next phase. Okay, one thing I want you guys to know, and this is why we teach Wyckoff, when you have an accumulation, your next phase is going to be a reaccumulation. All right, accumulation, reaccumulation. That's how the market moves. And then we go into a distribution, and then we pull back, mitigate one of these areas, and the market continues going. That is your structure. All right, that's how your structure forms. So if we see an accumulation, to confirm that we're going into a bullish market cycle, what is next? What do we need to see next? The reaccumulation. So this is what I told the group to look for. As far as those who was in the live call, I said look for the reaccumulation. 3 drives, right? Here's your 3 drives. 1, 2, 3. The market confirms our distribution right here. We need to see a distro first. Why? We're in no man's land. So that's another reason why we didn't just blindly take this as a trade, is because we're in the middle of nowhere. All right. We're in the middle of nowhere. So we have to be a little careful. If this here was happening down here inside of our point of interest, or if we had a point of interest in here that the market was reacting from, then this would have been an easy trade. No thought. We wouldn't need the extra confirmation. We would just take a trade blindly off of the accumulation, right? Because we're in a point of interest already, it's giving us confirmation. Since we don't have that, we have to wait for the market cycle, which is the reaccumulation. So we see a distribution and validation, and look, the market comes back quick, tap back into here, which is your entry. Once we confirm the high, once we break this high and we confirm, you can take an entry off of the reaccumulation, your stop loss at the low. Market goes higher. All right. So that was a scalping play. Something for you to look for, something to keep your eyes on. What do we do now? I mean, this right here is our main demand zone. I don't think we're going to come back in here. Not right now, honestly. We're definitely going to hit our supply zone first, but just keep that there just in case we do. To be honest, on GU, I would wait until we get into our supply zone. So I'm waiting for two things, guys. I'm waiting for a distribution, and the distribution is going to do one of two things. We might have started a distribution right here. This might be our buying climax right here. We might see the market do something like this and then create our test, and then we see a distro. If we see a distribution like this, this will be a good distribution for us to potentially take a sell from. We wait for the market to settle out. We take a sell from that, and we take the market lower, targeting this area. That is our most optimal thing that we're looking for if the market is going to sell. Now, the opposite thing I'm looking for is, of course, for the market to just react, probably give us a small reaction, and then we break through. If we see that, that is immediately going to be a trade. This is immediately a trade, right? This reaction off of the supply zone that gives us that reaction and breaks is usually your most optimal trade after a change of character and after a BOS, which that will be if we do break this high. We will break this and this. Honestly, like I was saying earlier, if we break these highs, I'm going to expect the market to actually break all of these highs and take out all this liquidity coming back into here. Okay, that's what I would expect this to come into next. So that would be a good buying to take us all the way up here. So if we break this high and we break this area, we're going to be looking for buy opportunities until we reach here. All right, so that is GU, guys. Let's go into gold. What do we see? So another lesson here on gold. This is funny, but look at that push to the upside. Our gold is going to continue going higher, guys. So that next target is going to be 3,000. Let me let's go into the analysis itself. So another thing, this is another thing we were talking about during the live call, this potential scalping play right here. So you can see here, now we have a new demand zone. We were watching this as well during that live call on Thursday. Right here on Thursday, we were watching this live, and we were seeing this push lower. And the thing about this push here, this manipulation here, as soon as we break back above this manipulation, understand that we are at a institutional price point, the 2,750. The market is not reacting here for no reason. Okay, this is an institutional price point. This is something that you can easily roll off the tongue. Okay, so if someone actually wants to price of gold right now, you're not going to say $2,770. No, you're going to say, oh, it's around 2,000, or it's around 3,000, it's around 2,000, 2,500, 2,750, right? You're going to use these bigger and more recognizable numbers to give yourself a range. Understand that's what traders do as well. Bots, algorithms, they're averaging around these institutional numbers. So maybe some people are taking profits around here, around the 2,750. That's why we're seeing this reaction, right? So these average numbers, these institutional numbers, we have bots and algorithms that use these institutional numbers. So if you think the market is being ran by algorithm, well, algorithm is going to use numbers to take profits and to buy and sell the market. So institutional numbers work for that as well. Us as traders, we automatically, just us as humans, we automatically reference these big numbers like round numbers. Okay, so understand that this is usually where people are taking profit, people are buying the market. So for example, why I'm saying this is, you see we have this distribution right here. One or two things is going to happen. Either we're going to sit here. If you start seeing an accumulation right here, if we start seeing an accumulation right here, the market's stalling out, most likely we're just going to break this high and we're going to continue higher. Okay, if not, if we see the market is still retracing to the downside, this is where you're going to take your buying opportunity. This is going to be a very important zone. Let me put an alert right here for you guys. This is going to be a very important zone, guys. Change of character. Or break a market structure. Why? We have a manipulation of liquidity, a push higher, and we're at an institutional price point. So when the market comes back in here, understand we might see a lot of buying pressure. So this is my next area that I'm gonna look for buys. So either we come back into this area here to look for buys inside this area down here, or we will accumulate right here and continue higher. So once we break this high, you can look for a pullback and continue taking the market higher, right? Like I said, I believe gold is going to continue higher. We're in a bullish market. Come on, guys, look at this. I've been telling you guys this all this time. All right, so continue buying gold, looking for those better trades. Next target is new high. Let's see. USD CAD. Same thing with USD, the same analysis that I gave out last time. This hasn't moved on USD CAD. We're kind of in the range right now. I'm not doing anything with it. I don't trade ranges. All right. USD Chef, we're at a great area. Right, USD Chef is at a great area. So we had our manipulation right here, our first manipulation. You can see I had the change of character right here. We end up not making that change of character, and so we're creating a bigger accumulation. Let me delete that. This is still liquidity. That's our STMB. This is potentially our spring, which means this potentially is the last manipulation of this range. I would not want to see another manipulation. It's low probability. If we do get one, most likely we're going to continue lower and we're going to invalidate our order flow, okay, which we don't want to happen. If we see our order flow invalidate, right, I'm going to give you guys that scenario first before we talk about the potential buying from this area. I want you guys to look for buys here first, and I'm going to explain that last. But I want to give you guys the second opportunity, the second scenario here if we do break this low. If we do break this low here, that's going to be your change of character. What do we know? What can we do when we get our change of character? We can take reversals. Where are we going to take our reversal? So if the market goes low and we break this low, we're going to take sales from this reaction. You take sales from that reaction to the downside, targeting our next major buying zone, which is going to be that reaccumulation, right? You guys remember how we were following this to the upside, seeing these bigger areas. This area here is going to be your next huge area to look for buys. Now, to be honest, I would cut that down into like 50%. So maybe down here to give yourself like, you know, a more proper stop loss. Now let's start talking about the buying, because the buying is the first opportunity we're gonna look for. How would we do this? How do we be careful? So I want you guys to be safe with this. What do we see here, guys? What do we see here? Terminal shakeout, right? It's a terminal shakeout. We have a valid accumulation. We have a valid push. We have a valid BOS of our accumulation. So we have confirmed our accumulation. Now we have what? A valid mitigation of that accumulation. What do we need to see next? Another push above this high. We need a BOS here. Once we get this BOS, guys, I want you guys to look for one or two things. I want you guys to look for our next reaccumulation. That's going to be the next way you can take this trade. So two ways you can take this trade. You could either, once we break this high, once we break this high here, once we break this high, you could either set up, just buy the market, buy execution, put your stop loss underneath the low. That's the simplest way you can trade this. You can do that. That's going to be the simplest way, the most optimal way to do this. All right. If you want to be more safe, okay, understand this here is the point where buyers have to keep the market going. They don't have to, but if they want to continue this bullish market cycle and continue this order flow, this is our last valid demand zone before we come back into our structures, which is the reaccumulation, before we come back into these larger areas of cycle, okay? So if the market's, well, sorry, your stop loss is actually going to go a lot lower. My bad, guys. Your stop loss is going down here, right? If you take this buy right here, your stop loss is going underneath the low. My bad. Not underneath this low, underneath this low, okay? That's going to be your most optimal trade if you just want to take a trade here and just forget about it, okay? Now, if you want to be safe, you're gonna have to do a little bit extra work. We're gonna zoom in here. You're gonna have to be scouting for a reaccumulation. So once we break this high here, boom, we break this high. Next thing you're gonna look for, that 3 drives. 3 drives, push lower, take this as your trade. Now for this trade here, if you see this reaccumulation for this trade, your stop loss can go underneath here. All right, because with this trade, you're not trading the whole area, you're trading the market cycle, which is the accumulation and then the reaccumulation. So this would basically be the same thing as if you were trying to trade this. Accumulation, reaccumulation. This is basically what you're going to be looking for here. Okay? That accumulation and reaccumulation that I just showed you. The same way. All right? The same way. So let me go ahead and I'm on GU right now. Let me go ahead and zoom back in so you guys can see what that looks like. You're going to look for this. When I say reaccumulation, this is what you're looking for. 1, 2, 3 drives. Market goes lower, takes out the lows, and we invalidate the high. Right? Once we do that, you take your entry. And your stop loss is going to be at the low of the accumulation. So in this case, if you would have taken an entry here, your stop loss would be here. And then in the USD Chef case, if you take an entry here, anywhere you take an entry off of the reaccumulation, your stop loss is going to go underneath the accumulation. All right. So at that way, if you didn't want to take the first opportunity, then you won't have like a major stop loss. Because, of course, if you just want to be safe, guys, even if you take the safer play and you still want to be safe and you still want to be like super safe, just put your stop loss underneath this low here. That's going to be the safest stop loss, right? But if you're going to take that second opportunity, if you want, a better stop loss to where you're not taking a huge trade, you put your stop loss underneath the accumulation. All right. I don't want to delete everything. I just want to delete these arrows. All right, let's go to AUDCAD. So in the last week analysis, we talked about AUDCAD reacting off of this area. This week, we broke it. So we've already shifted that. And we're looking for bullish pressure. Looking for bullish price action, taking the market higher. This was the area that we were looking for to fill up all of this imbalance, but the market actually didn't get up there. We're just continuing higher. What do we see now? Potential distribution, but it's not because we just kept out these highs. We didn't raid these highs. So I would reset this. Honestly, I still think we can go lower too. We have liquidity at the lows. So I wouldn't take anything from here. Right? I wouldn't take anything from this move. I would honestly wait for the market to create either a new move. They'll come down here and take out this liquidity. To be honest, we could come out and take all of this and go all the way down here to come back higher. So keep that as your potential mind. But I would honestly at least need some type of liquidity raid, and then we take a push higher or something. Or our safety play, we look for that reaccumulation. So we can at least have something that took out liquidity and we have a valid trade, right? We don't have any valid manipulation. This is not a manipulation. We didn't take out anything, right? All these lows are still here. We didn't raid anything. And then as well here, we don't have the distribution at the top because we did not raid any of these highs here. So it's not a distribution. A distribution is 1, 2, 3 consecutive drives, right? You see how these highs are taking each other out? And then we go lower. That's a reaccumulation. Okay, and of course we have other reaccumulations as well, but that is the safest reaccumulation. That's the one I want you guys to trade. All right, I don't want you guys trying to trade the other reaccumulations because those are more advanced. All right. I know a lot of people that's on the YouTube do not watch. Well, not all of you are in the Discord, so you might not have all of the advanced and all of the information. So I don't want you guys just trying to trade everything. I'm gonna give you guys the safest plays, the safest opportunities. And I don't want to make this call too long, so let me go ahead and speed this up. US 30. Let's go here, US 30, what we got. So I told you guys US 30 is gonna make a new high. All right. I do have a lot of these institutional numbers. My bad. I've been trading this. Well, I've been scalping this. Now, I've basically just been trading the institutional numbers. I've been scalping and targeting. So, this week I'm going to be targeting 750. So I will keep this up here. That's going to be my next target, 750. And let me actually talk about, because all I traded this week was US 30. And I'm gonna make a video about that. I'm gonna make a video explaining my trades. I'll tell you guys the trades right now. Let me go ahead and let's see if I still have access. Actually, no, we'll save it for the video. All right, I'll save it for the video. But I will tell you, I will explain you guys my trades. My trades came out from here. Right here, and I explained this inside of the group as well, and why I've been trading this. I've actually been trading US 30 from over here, right? From over here, and every time I'm targeting the institutional price point. So the first trade from over here, we're targeting 44. So after we conquered 44 and we get to here, which is last week on Wednesday, I took some trades out of here. So I took my trades after equities open, which was, where's equities open? Right here. So here's equities open, guys. Boom. Equities open. So seeing this push lower and then seeing the fact that we immediately push higher. Boom. What does this look like to you guys? Liquidity. Haha. So the thing the market did was equities open gave us some manipulation lower, reacting off of this area. Great, we push higher. Okay, so after that reaction, you see the market failed to close above this high. See that wick? We failed to close above this high, so we didn't confirm that the market was going higher for the rest of the day just yet. You can see the market comes back lower, and what are we coming for? Liquidity. Because we have low and we have another low. We have liquidity underneath these lows. We have buyers here. We also had this. This is where my stop loss was underneath this area because we took out Asian lows. So my stop loss was underneath here. I took my trade after we rated these lows. So I was looking for a trade underneath here. I was mainly looking for a trade here. This is where I wanted to buy the market. I was waiting till we get into here and I wanted to see accumulation to take us higher. But you can see we only wicked. So I was not going to miss a trade because of the wick. So once we came underneath this liquidity, and you guys can see it's just a simple setup. We have liquidity, we have a demand zone. So this right here would be our inducement to tap into our demand zone. And to, this is a simple, smart money trade. Simple. If you know inducement, order blocks, everything is simple, right? Now, basically, I was waiting for us to react inside this area, but I seen that we kind of just did this and we kind of gave a reversal. And as I go down, you're going to see exactly what I seen. For those of you that can spot it. Here's our accumulation, guys. 1, 2, 3. Right, 3 drives to the downside. Here's our break. Once we got the break of this high, I took my entry. Right, my entry came from like up here. I took my entry up here when we confirmed the accumulation. So my entry was off the confirmation of the accumulation. Stop loss underneath this low, and I held all the way till 44,500. That was my trade for the week. I took two positions off of that, and I held that for the whole week. And that was it. I didn't take any other trades. I didn't trade anything else. I didn't trade NAS. I didn't trade GU this week. I didn't trade EU. I mean, we were looking for trades on GU, but you kind of see. But US 30 was my main trade. I took 2 positions here. I risked 2% on this. I was really confident because this market is a bullish market. We're going higher, right? So I took 2 positions, each 1% risk each, and I held that till 45,500. I mean, till 44,500. Now, what am I going to be doing this week? So this week, I'm pretty sure we're going to keep retracing. I would love for us to keep retracing. I would want to see us continue coming down back into this zone. And I'll be looking for buys here to take us higher into the 44,750. Or what I'll be looking for here is for us to come back above the 500. So once equities open comes back out, once equities open comes out on Monday, I want to see how we get to here. I want to see us come in here and I want to see us close above here. If we can close above here and we can hold here, especially like let's say we break this high. If we see equities open come out and we spike past this high and then we're coming back down, yeah, I'm going to look for a buy with my stop loss underneath here, trying to take us to 750, right? As long as we can come up and close above this 44,500, I'm going to watch the market and see how we react here. I'm definitely going to take a trade here if we see something like that. It has to be a valid break, of course, but we're not going to be too aggressive. We're in no man's land. We're not going to take trades from here. We're going to look for the market to come into here or for us to close back above the 44,500 and or break these highs with a solid movement. All right. NAS is bullish. I'm going to tell you that right now. NAS is bullish. Let me take this out. Look for a pullback into this area. I'm going to keep it simple for NAS because we are bullish and I am looking for buys, and I would look for buys here on NAS. And we have liquidity right here, and then we have the 22,000, which is our next institutional price point, leading us to our new high. Order flow is still bullish. Look at this perfect order flow: low, high, low, high, low, next high. Okay. So this is going to be the demand zone that I'm looking for. See if we can get a pullback into this area, take us for a new high. Tesla. All right, start looking for pullbacks. Most likely we're going to come and take out this liquidity, guys. So 4,400, I would wait for a close beneath 4,400. So wait for a close beneath 400, my bad, 400, wait for a close beneath 400. Once we close beneath 400, look for a pullback, redistributions, take it lower, targeting this area. And then ultimately, like I said, we could come back all the way over here. You can kind of see why the market is struggling, right? We can see the market is struggling to push to the upside. And we're not seeing much accumulations. We're seeing this as a redistribution. This is a type 2 redistro. This is not our main redistro, but you guys know how our redistributions are. Usually our moves like this. It'll build a floor, which we call our ice. And then we break through the ice, look for a pullback, test the ice, come back down. Boom. All right. So that is pretty much it for this market analysis, guys. I hope you guys enjoyed it. If you have any questions, video ideas, I'm taking any recommendations for video ideas. I'm going to be posting more educational videos talking about Wyckoff, supply, demand, market cycle, order flow, whatever you guys want to see. Let me know, depending on the topic. Leave your questions, comments, or concerns down in the video. My Instagram is in the description as well if you guys want to reach out to me personally or if you have a message for me or something. Okay, so I will see you guys in the next one. Thank you for joining. Peace out.